Hey folks, Dan Frio here with your real estate news for December 11th, 2025. We're going to call it the day after the Fed surprised. So today we're going to talk about what the Fed did yesterday. Now they cut rates, but they did a couple other things. They give us the dot plot, but then they completely threw us a curveball on how they're going to finance the national debt now. I'm calling it QE2, but the other people are saying, okay, maybe they're not really doing QE. A little bit confused with this. Well, my goal is to come in and explain to you guys, especially if you're a homeowner, are you taking advantage of these low rates? Are they going to go lower? Or if you're visiting my channel today, most likely you're a homeowner, maybe a home buyer, realtor, loan officer, trying to figure out what the heck's going on with those now that the Federal Reserve cut rates? So, folks, let's get into today's news. But my name is Dan Frio. I'm the host of the Rate Update, and I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I'll give you my information at the end of this video, but we have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, you got to stay till the end for that. So let's get over to this. Are you taking advantage of these refinance rates right now, folks? Well, if you're not, go to my website. I have a rate watch tool here that you can actually put in your information and I'll track it for you. So when rates hit exactly where you want it to be, I'll reach out to you. But here's what we got yesterday. The Federal Reserve came in and they gave us some information. What was it? Well, they came out with a decision that they're going to cut rates 25 basis points. They also said, well, we had a lot of people kind of dissenting. Usually it's kind of a consensus vote. It's usually almost everybody votes for a cut. You might have one person kind of saying, oh, no, we shouldn't cut. This time we had a lot of dissenters. But then they're giving us the dot plot, which signals not as many rate cuts as we thought. And then there's a twist. So let's get over to this news so you can understand what's going on with things. So first off, let's go to the dot plot. So here's what the Federal Reserve does 4 times a year when they come out. They put a dot next to where they expect the federal funds rate. You have to understand what the federal funds rate is if you're watching this video. The federal funds rate is the rate that the Federal Reserve controls. It's not mortgage rates, it's not car loans, and not credit card loans. It's basically the rate that the Federal Reserve controls. It's basically interbank lending. But they gave us the dot plot. So let's get over what the dot plot looks like. So here's what they call the dot plot. Across the side over there that's where the federal funds rates numbers are. At the bottom you can see down through here, that's the year. Well, in 2025, everybody voted, well, basically it's over with now, but they voted to keep rates right through here, 3.5 to 3.75. They actually reduced it. Well, look at all the dissenters. These people are saying, no, we don't need to cut rates. And then one person said, we should cut rates even more. So they cut rates. Well, now here's what they're projecting for next year. Here's where it gets a little confusing. Now there's really no consensus vote anywhere. So everybody's saying, well, they might cut once, they might cut twice, but if you read this right through here, they're saying, oh, it's going to cut one more time. Well, the consensus really doesn't tell us that. So right now, as it stands on the dot plot, doesn't really look like there's any more rate cuts coming down the pike. So now let's go over to here. Here's what the Federal Reserve did yesterday, right through here. Buyback announced, and this is treasurydirect.com. So what they announced is something really intriguing, I guess. So here's our national debt. We know it's crazy, $38 trillion and growing fast. So how the government funds this is they issue bonds. We use a credit card. Well, the bonds that we follow each day, and I'll show you that in a second, really funds this stuff. But what the Federal Reserve did yesterday is they came in and said, you know what, we basically have enough money on our balance sheets and we're okay. We're going to start buying back bonds. Usually when you call it QE, quantitative easing, they're buying back bonds, like long-term bonds, 10-year treasuries, things like that, mortgage-backed securities. But in this case, what they decided to do is we're going to buy treasury bills. And everybody's like, why? Well, if you look at the tea leaves that we were given up until now, it's intriguing. So here's what's happened. So the federal government, instead of issuing bonds, 30-year, 10-year bonds to fund the government, what they decided to do is issue treasury bills. Now, you have to know the distinction between those. All it really is one is short-term, one's like an adjustable rate mortgage, and one's long-term, like a 30-year fixed. Okay, so think if you had an adjustable rate mortgage and every 2-3 years you had to refinance. Okay, that's what short-term is. Well, if the rates go up, you're forced to refinance. That's not good news. So when the federal government started funding all this stuff by treasury bills, I'm like, this is really risky. Because if rates start to go up, well, the federal deficit could really ratchet up because that's more interest we're going to pay. Think of it, if you refinance an adjustable rate mortgage to a fixed rate and the rates were higher, you'd have to pay more money. Think of it that way. But what they've decided yesterday is the Federal Reserve is going to do this. The national debt is going to get pushed over to treasury bills instead of bonds. Then the Fed is going to gobble that up. and eat it up. So our national debt might start to just stabilize and drop because the interest that we're going to pay on this debt starting to go down because they're going to refinance it at shorter term rates. Genius move. Never thought it was going to happen. When they were selling Treasury bills, I'm like, what are they doing? Well, now we know. So I'm going to say I'm calling it quantitative easing 2. It's just a little bit of a different approach on how they're doing it. A little bit confused. Subscribe over there because every day I post a video explaining to you guys how all this stuff works. Now let's get over to the news that we have for today. And the only thing we really got was continued jobless claims and initial jobless claims. Well, the initial claims, they don't look that great, but if you look at continued claims, looks like people are getting absorbed back in the market. Maybe companies are getting a little more comfortable now. I hate looking at the glass half empty like a lot of channels do. I always want to come back and give you feedback, at least positive feedback on how you can take all this data and capitalize on it. So what we're seeing right now is the jobs market did deteriorate a little bit. Last reading was 192,000. They thought it would increase to about 220. It went all the way up to 236. But here's the interesting part of this, or I'll say the light at the end of the tunnel. Continued claims is going down. That means people are getting absorbed into the market. Yes, they're getting let go, but you can see this actually plummeting. That's good news for the employment numbers. Now let's get over to see what the bond market's doing right now. They're still ticking along. We have the bonds up 7 ticks today. Here, let's get over to Rick Santelli. This was just breaking news. Let's see what he can give us on the initial jobless claims. Let's see what his thoughts are on this. And then we're going to go over and going to show you the bond market reaction yesterday after the Federal Reserve announced what they're going to do. It was intriguing because it kind of caught me off guard as well. But let's get to Rick Santelli. Sorry to bring this in here, but it is breaking news on the employment numbers. This is huge because it's one of the things that the Federal Reserve watches. So I know I just went over the numbers with you, but let's get Rick's take on this. So Rick, let us know how the employment numbers are faring.
Squawk Box, Rick Santelli here live at CME HQ with the breaking news on this Thursday morning. Post 25 basis point rate cut by the Fed, third consecutive one. Initial jobless claims for the week of December 6th. Well, we're expecting a number around 220,000. It has been extremely well behaved. I still don't see it on the wires. We'll go to the trade balance next.
I watched it live.
Minus $52.8 billion. That's a better, lower trade deficit than we expected. We were looking for a number closer to $62 billion, and that follows a revised minus $59 billion. Minus $52 billion would be the lightest going back to, wow, we're really going back. Well, my records go back to 1992, and to find a smaller number than minus $52 billion, we're all the way back to June of 2020. 236,000 is initial jobless claims. So the 191 that was in the rearview mirror, obviously the seasonal adjustments didn't do a very good job. It was only slightly revised, though, to 192. Now we jumped to 236,000. 236,000 would be the biggest, going back to 264,000. That was September 5th of 2025, the first week of September of this year. And on continuing claims, 1,838,000. 1,838,000. That is about 100,000 less than we were looking for. That is an unbelievable drop in that number. Last month was 1,937,000. To find a lower number to 1.838, we're going back to, we're going back to April of 25. April of 25. It seemed like a lifetime ago, doesn't it?
We're going to leave it at that because the numbers he gave us today, we just went over, they're pretty darn good. We had the trade deficit coming down $50 billion. We had initial jobless claims jumping up, but we had continued claims coming down. That gives us kind of a painting of not a bad economy. So now let's get over to how the stock market's doing. It's red across the board. This is the un-Cinderella story that we talk about. But the Dow Jones, I'll take it. Down 3 after a 500-point gain. So across the board, are they taking profits? Maybe. Okay, we were at record highs, I think, or close to them yesterday. We got oil down at $57 a barrel. Dude, if this goes down to under $50 a barrel, you're going to see inflation plummet. So between this and tariffs, I think it's good news out there. Bond market's starting to drop as well. Let's get over to cryptocurrencies. They're down to $90 a barrel. So that's what we're seeing across the markets through there. So let's recap today and what the Federal Reserve did. Federal Reserve came in yesterday and they cut rates 0.25%. That wasn't a change. They went in and gave us a thought plot. That really didn't shake the markets as well. well, but they had a QE2. Hopefully I explained it to you in this video today because my goal is to explain to you guys what's going on with these. So if you're a realtor out there, you're a loan officer, now you understand what's going on and why yesterday was such big news. If you're a homeowner, what do? Do you refinance now? You're looking to buy? Let me give you my lock or float section of today's rates. So here's what we're going to talk about. If you're closing within 30 days, I'm still saying this, lock it in, because these numbers can go up and down, and even a tweak can change things. So the holiday season is upon us. Don't really fret about all these things. Okay, so now if you're out there, you're looking to buy or build maybe in the next 2-3 months, maybe even 6 months from now, what should you do? Well, I'm still saying hold off. Don't lock in at these rates because based on today's news, rates are going to be stabilized. And in the most case, they're going to start coming down even further. So my quote or my estimates for this year, my revised quotes, I'm going to come out and say they're going to be 5.875 to 6.25. So we're a little bit above my trends right through here. My last forecast was at 6.375. So I'm bringing my forecast down about 1/8%. Nothing huge because I think mortgage rates are just going to be sticky, but they will start to gradually decline. So if you're looking to build or buy, just float out there. But if you're still closing within 30 days, my suggestion is still lock. Don't drive yourself nuts over this because in any given day, we can see rates, and we've seen it go up over 1/4%. So make sure you're protected. Reach out to us. And if you're looking to build or buy, we'd love to help you. We'd love to make sure you're actually in the right position. Is your credit scores as high as they can be? We can coach you with that. What income do banks use when they're qualifying you for a loan? We're going to make sure we're using that. Then we're going to go through each program available to you and explain to you guys why we're choosing the one that we would go with, but then we're going to let you guys choose exactly the one you want. But the unique thing about me here is, yes, I'm licensed in all 50 states as well as Puerto Rico, but we're going to compare your loan with over 30 different lenders to assure you're getting the lowest rates and lowest fees in the markets. How do we do that? Well, the bank that I work at provides me the licensing throughout the whole country, and they're also providing us 35 or 36 other lenders we can work with right now. These are banks, mortgage companies, and credit unions. So if you're trying to call all these banks, put in all these applications, I wonder if you could put in one application, have one credit pool, and get compared with over 30 different lenders. Reach out to us. We'd love to help. My name is Dan Frio. I'm the host of the Rate Update, and each day I come in and hopefully my goal is to explain to you guys what the heck's going on with those and the whys behind it. Thanks for watching. I'll be back later today at the closing bell to let you know how this mess ends for the day. But if we can help you with a refinance or if you're looking to purchase, please reach out to us at therateupdate.com. I'd love to help you. Take care. Have a fantastic day. I'll see you at the closing bell. Bye-bye.